Welcome back. You're watching Buy Now, Sell Now, and it is time for us to go to the query segment. I know some of you have been waiting on social media. Thanks so much for waiting by. We're going to take as many queries as we possibly can over the next 20 minutes or so. Let me introduce our two guests for today. We've got Kunal Bothra as usual, and we've also got Sharmila Joshi. Welcome to the both of you. I want to start with you, Sharmila. And we've got the banking back in focus today, quite a few of them doing quite well. But Danny Verghese has got a question on Axis Bank. Would you enter this counter right now for the medium term, short to medium term?
I think that could possibly sort of stop me from entering the stock now would be there has been some news that Suti will sell off its stake in Axis Bank. So that will obviously create that overhang, and the price may not go up too much. But in terms of numbers and other parameters, it's a fairly decent stock. I would of course say that within this space, possibly at these levels, ICICI Bank is my favorite stock. But Axis Bank is, if you have a long-term view, is fine. Maybe I just hold off a little bit before buying.
All right. Good morning, Sharmila, as well as good morning, Kunal. Kunal, I'll come to you with this query, and our viewer Sagar, he wants to know what's the view on JK Cement. He's bought about 6,000 shares at 1,150 to 75 levels. He's saying the stock has actually rocketed from those levels. Should he hold or book profits? What's your view on JK Cement? Another good investment coming in from Sagar.
So congratulations to the viewer Cheryl, for holding the stock at such a crucial level. I think 1100 or 1250 apparently was the breakout point for JK Cement, and post that we've seen a lot of rally coming up into many of the cement stocks. It's done fabulously well from 1200 levels to now just about perched at 3000 odd levels. Looks very attractive on the charts, and I would sense that if you are in from a longer term view, then you can continue to hold on to your investments. If you're probably looking for trailing stop loss, then I would suggest maybe a 2750, 2700 as a trailing stop loss zone for JK Cement. I think that's a very important support. The stock has been holding on to this range for last 4 months. So if it manages to hold on even over the near term, then I believe that the rally could build on for the stock. So hold on to the stock and probably keep a trailing stop loss around 2700, 2750 mark.
Okay, let's take another one. This one is from Balan. He's got 500 shares of Happiest Minds bought at 800. Coming to you on this, Sharmila, would you hold on to this investment or would you sell at this juncture?
It has come up from the price that he bought it at. So that's something that he needs to watch for. But I think in terms of where the company is and in the line of business and the kind of numbers they've been doing, I would really request him to stay invested, and it may take some time because I think the valuations have gotten a little ahead of themselves, but I would think that if he is a long-term investor, he should continue to hold on.
Next one is for you as well, Sharmila, and this query is coming from Joby Sebastian saying that Bata or Relaxo, which is a good bet for the longer term? Could you suggest which of these footwear players makes sense to be invested over the longer term?
Actually, both are good, and both have their sort of niche segments that they are present in, and they have continued. Bata obviously has that MNC flavor, and Relaxo is a domestic company, but the kind of products that they have and the price points that they have, I think post the kind of relaxation that they had gotten in GST for the footwear below a certain price, both have a very decent product range there. Bata possibly has a better footprint in terms of the number of because it has its own stores and it also is present in other stores, etc. Relaxo's model is different. But to my mind, both are okay. Maybe I would give a slight preference to Bata. But having said that, I think if you're a longer term investor, both seem fine.
Okay, we've got a question from Santi, and Santi's got Advanced Enzyme Technologies at, or rather he's looking at Advanced Enzyme. the current market price of around 486. He says that it's trading above lifetime high, and he's asking whether it makes sense to take a fresh position, Kunal, anticipating a much higher highs in the short term with a stop loss of 440.
I think it's a good trade. Yeah, I think 440 is good enough support for Advanced Enzyme. It's the support from where the very recent rally, which started I think a week back for the stock, I think started off where it managed to bottom out or plateau out at the 440 levels, and from there you saw the stock gradually moving up higher. Decent pickup in volumes. I would not say great pickup in volumes because it's still lower than the monthly average volumes for the stock price. So I think it's a steady pickup, and I think when you're looking at it from slightly medium term kind of a time frame, you can look to buy at current levels. But then I would suggest that don't enter the entire quantity over here because of the slight lack of volumes. I would sense that probably the stock would drift back into a consolidation for the next couple of days and then start to move up higher. So I would suggest a buy on dips, maybe starting at current levels and then wait for another 10 to 15 rupee dip. I think that could be a prudent strategy for Advanced Enzyme.
The next query is coming in from Seema saying that she's bought 500 shares of Tata Motors DVR at 80 rupees per share. Wants to know whether she should book the profit or continue to hold on to Tata Motors DVR. Kunal, what's your take coming in on Tata Motors DVR?
I'm very bullish on both these stocks, Tata Motors as well as Tata Motors DVR, and I for one believe that that this cyclical uptrend which you've seen, or the change of trends you've seen for Tata Motors and Tata Motors DVR, of course, I think both these stocks could go into a multi-year uptrend even from current levels. So I think it's now a matter of patience, and it's now a matter of holding time. So I would suggest that if you have a longer term time horizon, since you've purchased at a good price, I would suggest that you should hold on to your holdings on Tata Motors DVR. I think over the next 2 to 3 years, I would send somewhere closer to 200 to 50 as a potential target range for the stock price.
Okay, Sandhya's got an interesting question, but Sandhya, I know that you referred it to Kunal, but I won't take the liberty of taking this across to Sharmila because it appears to be a fundamental question. So Sharmila, she's asking about the PVC pipes segment, and she's asking which company would you bet on. So you have the likes of Supreme, you have Finolex, you have Prince Pipes, which I think is a recent listing. Which would you pick, and are you confident that the sector will really boom in the years to come?
Yes, because I think that what we are seeing is, and this move started probably a couple of years back when we saw that a lot of pipes which are used, in buildings, in residential areas, a lot of those were getting replaced by PVC and material other than metal. If you remember, back in the day, most of the pipes that we used to have running down our buildings used to be metal, but now these are increasingly getting replaced by PVC pipes. So it is sort of industry sector that will move hand in hand with the kind of real estate development that we are seeing across the country. I possibly prefer Finolex Industries in these, but I think Supreme also is doing really well. So it's a sector I like, and again, within the sector, if you go to see, each has its own niche and each has its sort of an area that it caters to better. So within the companies that we are speaking of, Finolex and Supreme would be my choice.
All right, the next query is coming from Sumol Prasad saying that is it good time to take fresh positions in Balrampur Chini at current price for the medium term? So Sharmila, what's your take coming in on Balrampur Chini? We've seen a lot of these sugar stocks also gain traction of late. So what's your take coming on Balrampur Chini? Makes sense to invest at current levels for the medium term?
So I think the negative for sugar sector has been, the cut in their import subsidy that we've seen. So this will definitely, export. So this will definitely mean that, this is a sort of a semi-regulated industry. So there is no way that the government would want sugar prices to run away and make things more difficult for the domestic consumer. So this is a very good move from a domestic user perspective, but maybe not such a great move from the sugar company perspective. And this has been a sector that had really been running away with it, given the fact that the whole ethanol story is playing out, as well as the the possibility of exporting sugar was playing out. So one would it would seem that part would sort of slow down, which is why you're seeing this correction today across the sector. But ethanol remains a story that can play out very well for this as a sector going forward. So I think that take a break from this sector. Don't be in a hurry to invest in it. But if now when you look at it, definitely keep both these things in mind. That it is a sort of a semi-regulated industry, and then the big play for it going forward will be the ethanol story.
Absolutely interesting. And of course, the latest update with regard to the subsidies is playing a big factor today in the correction that you're seeing across the board. We've got a question from Padma on Orient Paper. And Kunal, this one's for you. Hopefully, you can tell me something about this. Bought at levels of 21. Stock is currently trading at 27 or closer to 28. Would you book profits at this juncture?
No, in fact, I would suggest to hold on to the investments. Many of the paper stocks are actually going through a breakout. So, there have been, much better, quality stock, which have done exceptionally well, like I think JK Paper and West Coast Paper, etc. But I think Orient Paper is also lagging a bit behind. But, the chart patterns are developing quite well. The recent volumes on average have been quite better for Orient Paper as compared to the average of the last 1 year. So in that sense, which means that there has been some fresh buying which has of late happened to the stock price, and that generally augurs very well for the near to medium term. Since you bought at a good enough price and you're sitting in a profit of I think 6.5 or 7 rupees on your investments, I would suggest to hold on to your investments over here.
Alright, the next query is coming across to you only, Kunal, and this is from Ritesh. He is our regular viewer, and he's saying that he shifted to Indiabulls Housing June call 230 from May 220 call. He wants to know what should he do next. He's saying that there is it's actually gaining 16% and upwards. So what should he do next? This is on Indiabulls June call 230.
So this is what exactly I was indicating yesterday, Shell. If you remember, we had a viewer who said, around 220 call, and I mentioned to hold on to the investments. And today, apparently, the stock has actually hit that 220 mark. So I'm certain that the 220 call for Indiabulls Housing would probably have gained a lot of traction on the upside. I think from yesterday's price of 3.5 or 4 rupees, it had jumped up to almost 9.5 to 10 rupees, and that's a sizable return on your holdings for a call option. Now, if you're expecting that the stock will cross back about 230 levels, it would be a tad bit much. What happens is after a certain set of news flow, if you generally see a spike of 10-15% into a stock price on a very short-term basis, there is always a possibility that the stock will go sideways. The moment it goes sideways, even if you have far or the next month call option, the time value erosion could probably play a bit tricky. So what could happen is that maybe the stock consolidates at this 15 to 20 zone for some more time. You might see the call option eroding value and coming back to say 3 or 4 rupees lower from current levels. So I would suggest that rather than holding it or trailing it higher on the upside, you should book your profits over here and then wait for the stock to cross back about today's high. That process could probably take another couple of trading sessions or maybe by 1 week. And once that happens, then I believe it makes sense to try and buy the 230 call option for June series.
Okay, I'm coming to you, Sharmila. I'm coming to you on this next one. We've got Shanmuga Sundaram, who's bought Federal Bank at 76, so making money at this point on the trade. But considering everything that you're seeing developing in the banking space, would you say that Shanmuga should hold with a view? So Shanmuga only wants to hold for a year. Do you think that this is the best contender in the banking space?
No, but as you said, he is making money, and if things stay sort of okay for the bank, then it has a possibility of going up to sort of 90 levels. But as we discussed earlier, I think possibly in the PSU banking space, SBI, whose numbers are expected today, could be a good stock to look at. Otherwise, we've spoken of ICICI Bank, Kotak Bank. These could be some other names. But since he's making money and the going seems good for now, possibly he can hold on till levels of about 90.
All right, the next query is coming from Rohit. He's saying that he has 200 shares of Glenmark Pharma that he's bought at 550 rupees per share. He wants to know whether he should continue to hold on to Glenmark Pharma or should he switch to Cadila. Kunal, what's your view coming in on Glenmark Pharma? Makes sense to hold on to the positions that Rohit has, or should he shift to Cadila?
Well, I think both of these stocks are top quality stocks from the pharma pack. I'd probably give more emphasis towards Glenmark Pharma. The reason why I believe that is because the stock over the last 7-8 months, so except for the previous month and current month, prior to that, over the last 6-7 months, the stock had remained absolutely sideways from 500 as a pivot point. It was in a range of 530, 540 on the upside and around 460, 470 on the downside. So when you generally see such an exhaustive range in terms of time and price, and when you expect a breakout to happen, the breakout is a multi time fold breakout, not just even price fold breakout. So if that happens for Glenmark Pharma, I believe that the stock can come back towards levels of 700, 750. So I believe that the prospects over here are far more better as compared to Cadila. But then again, I think it's a difficult play to try and pick up just one of the stocks from the pharma pack. But purely based on charts in the short term and the medium term prospects, I think Glenmark Pharma could probably come back to 700, 750 zone.
Okay, Kunal, coming back to you on this one, and this is another question from Sagar, and I think I'm going to include you also when I ask him to buy me a cutting chai, because this next counter is also making him a lot of money. JK Cement, he bought 6,000 shares at levels of 1,150 and 1,175, and the stock is obviously trading currently at 2,970 or thereabouts. All right. Oh, okay. So we've already got that. Anyway, we've answered that question. I'll come back to you. I'll come back to you on another one then. And let me go across to Sharmila. Sharmila, Raghupati's got a question on HDFC Bank and Infosys, and a lot of people count these counters as portfolio plays. Would you say that you should bother about an entry price, or would you say that you would accumulate them over the course of weeks or months?
Absolutely. I think that's the best approach and strategy to take with names like HDFC Bank and Infosys, because, I think this is a question that all of us deal with from time to time personally, as well as, the queries that you get, that if you are constructing a portfolio, which are the stocks that should be in it. And I think both these stocks deserve a place in a long-term portfolio. So yes, it all depends on, for instance, when I bought Infosys, I possibly bought it at the highest price ever. This I'm talking of pre-2000 sort of levels, when the stock was at 10,000 rupees. But I'm still making money on it, post that, because I've held on to it long enough and I've been rewarded with bonus and bonus shares and stock split, etc., etc. So it really doesn't matter. What I'm trying to say is that what price point you buy, because the good companies do reward you. Also, a stock like HDFC Bank, now its growth has slowed, but even then, quarter on quarter is growing at 18%, which simply means that in about 2.5 years, your money should double. So I have no really in recommending both these as the portfolio stock.
All right, the next query is come from Mahendra Patnaik, and this is on Yes Bank. He's bought Yes Bank at 14 rupees per share last year. He wants to know what's the take on Yes Bank. Sharmila, over the last few days, we've got a lot of investors actually asking about Yes Bank. Most of them have actually bought this particular stock at a lower rate as well. Some of them at quite a higher price, a price that we've actually not seen over the last 2-3 years. So what's your take coming in on Yes Bank?
That's what a little disappointing, because honestly, I was also contemplating that maybe, the stock has come to levels, because, there was a lot of, as we all know, there's a whole story that's played out in Yes Bank. So I don't want to repeat that. But the point is that now it has moved on from there, and then now you would expect some sort of something to show in the numbers to sort of indicate that things are getting on a better, stronger foothold. But I didn't really get that sense from the numbers. So it's like I'm no longer very worried about the stock to say that no, you must exit, but it's still not a buy for me. So it's in that in-between zone. So if he has a stock, he can continue to hold, but I really wouldn't recommend a fresh buy just yet.
Manoshi Gupta has got a question for you, Kunal, and this is Venki. He's bought 20 shares at levels of 2,350. He's not making money at this juncture, but it's not too far away from the buy price. Would you hold on, and where would you put your stop loss on this trade?
Hold on. I think this is the first month of a strong breakout for Venky's. The last 7 to 8 months, again, it had been more sideways. And when you typically see a sideways price action and then a breakout, it results into a more of a domino effect for the stock price, where it tends to move up higher and gain a lot of traction for itself. So I think in that aspect, Venky's is something which I would advise to hold on. Give it at least another 3 or 4 months, if not more. I would sense that once if this breakout is successful and it sustains, then the stock would probably come back to levels of even 2,700, 750 as a moderate kind of a target zone. So I would suggest a hold on Venky's India, given the kind of breakout the stock has seen this month itself.
All right, so that is the take coming in on Venky's, but unfortunately we are out of time for the query segment. But before we wind down and thank both the experts, Kunal, I want to know, what are your high risk and low risk ideas for the viewers today?
I'll suggest two buy calls. The first one which I'm suggesting is ABAN PFC, a power finance stock nearing a very strong and a classic inverse head and shoulder breakout. So would suggest that as a first buy, targets of 130. So expecting at least another 10 to 12% upside from current levels, stop loss to be kept at 114 levels. And the second stock which I'm suggesting is ABAN BEML. Even that stock is forming a classic bullish flag pattern on the hourly charts, which suggest a buy with a target of 1500 and stop loss to be kept at 1275.
Okay, Sharmila, could you tell us what your ideas are for the viewers?
Yes, my high risk idea is UltraTech Cement, and high risk really is the fact that every time we get into this lockdown sort of situation, you will see some disruptions in the way things could construction activity, etc., could proceed for UltraTech. But having said that, I think cement as a sector has had a very strong quarter, and going ahead also things look good. I think a while back you spoke about JK Cement. That's another great stock. I think even UltraTech from current levels has an upside of about 10 to 50%. But you need to factor in these near-term sort of drawdowns, because we don't know how long this whole lockdown and given where our numbers are, how long this situation is going to continue. So going by that same theme of the kind of numbers that we are that we show, and how it has really impacted a stock, which is my next stock, which is SBI Life. What we've really seen is the data has shown that life insurance, the first new premium has grown by 44%. And of course, SBI Life has not shown such a great growth, but the fact remains that they have a very good distribution network. The valuations are attractive. And this is, I think, we are sort of underinsured in terms of if you look at, sort of on a pan-India basis. And I think this is a sector that would continue to do well. So SBI Life would be my low risk idea.
All right. Thank you, Kunal, as well as Sharmila, for joining us on the show, giving us your take on which stocks can one look at, and also resolving all the viewer queries. And on that note, we'll slip into a break in this edition of Buy Now, Sell Now. But stay tuned, more on the other side, so don't go anywhere.